Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the RBA Governor Philip Lowe told an annual Anika Foundation address in Sydney that although the economy overall fundamentals remain strong, the central bank was prepared to produce further growth by taking the official cash rate below its current level of 1%. Dr. Lowe said the most recent back-to-back cuts in the recent interest rates reduced for further tax rates for millions of low and middle income earners. Higher commodity prices and stability in the housing market would all support the economy. However, if they fail to generate enough activity, the bank stood prepared to take rates lower. A lot of officials, the economists that is, in the city around calling for a rate cut of 225, one in October and one early next year. Therefore, could see the Aussie fall lower. My forecast is still towards 69 cents and reassess from there, with the resistance intraday now seen at 69.85. Well, what a knee-jerk reaction we had overnight, with the market rejecting the top side of the range of 111.80 and also rejecting the bottom side of the range of 110.90. Following the European Central Bank's expected decision to keep the benchmark interest rate steady at 0%, Mario Draghi, president of the ECB, said the bank's all-important inflation target should not be viewed as a 2% cap. In a significant move accompanied on Thursday by further exploit hints of easing down the road, and now hints towards September. From a technical point, though, there is uncertainty now from where we are, in between the range of 110.90 to 111.70.80, which was the break level on the way down. Nevertheless, from a technical point, they're still married and do support a bearish case with the RSI and the MACD. So therefore, I do expect to see another challenge to the downside, but if you're trading from the short side, still continue to lower your stop losses accordingly to your risk management in case we get a break of 111.80 and look towards 112.40 with a cap now at 112.95 to 113.30.40. Well, dollar yen strides higher and now takes the challenge beyond 108.5 to the level of 109. I've been saying for some time now this is opportunity to start shortening the market. I believe the risk is still to the downside, especially when North Korea just recently fired off 2 missiles. But little development has come from that, other than the fact is that the US has requested for North Korea to refrain from further provocation after the communist country test-fired 2 new short-range ballistic missiles and said it hoped for a resolution of working levels talks on North Korean denuclearization. But let's see how that plays out. But for now, as I said, I'm looking to short this market and look for a pullback to at least 108.20 or 107.70 with a base at 107.15.25. As you can see, the pound is still struggling to gain any bullish traction and still remains exposed towards 123.50. A break beneath there would give further scope to 121. With any advances at this stage, needs to clear 125.50.70 to promote the move up to 126 to 127, but from a technical point, looks unlikely. I'm still a little bit concerned on this bearish outside range day now as posted overnight, and the fact is that the support comes in at 1,395 to 1,410. It is assessed that further weakness may come into play and therefore see a move towards that region before any reversal. And I believe once we get a bounce from here, we look back towards the top side of the range around 1,433. To wrap up with oil, well, the market hasn't gone hardly anywhere in the last 7 consecutive days and still trading sideways with a 2 inside range. Like previously, we had 3 inside range and an outside range day to 2 inside. If we get another one, I'm still holding the view the market will rebound from $54 a barrel, look up towards 58 and reassess from there. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new day and the new weekend.